IVM.
How has retail investing evolved before you? Can you just lay down what has happened in the past, and then the next question will going forward? Because I want our listeners to understand, when they see these numbers of 15,008 crore SIPs in value, it seems it is actually a very large number. I think 10 years ago, 20 years ago, this number was exactly zero. So if you could just take our listeners through this retail investing evolution in the Indian stock markets.
In 1991-92, Arshad Mehta time, 2000 TMT bubble time, 2008, market fancy, where retail investors were behaving as if they were momentum investor. They were chasing stocks without fundamentals. They were behaving in a herd mentality, and whatever was moving up, they were buying into it. By and large, their experience always resulted into disaster, and they were left with stocks which were of no fundamental value.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and in today's episode, I'm honored, really honored. I've wanted him for a very long time to welcome a veteran of the Indian markets, Nilesh Shah, Managing Director, Kotak Mutual Fund. We're going to talk about a lot of things. Nilesh bhai, welcome to Paisa Vaisa. Thank you so much, really. Thank you for doing this for our listeners.
My pleasure, Anupam.
So nice of you, Nilesh bhai. And you were already on the Economic Advisory Council of the Prime Minister. So many congratulations now on your new role as part-time member of the Aadhar project, the UIDAI. So really congratulations to you, sir.
Thank you, Anupam. These are all great responsibilities, and as a market person, I'll try my best to discharge them.
I've always been the fan of your humility. When you say market person, just let me start from there. You're a veteran. You've seen I don't know how many bull and bear market cycles in India. Given that kind of experience, sitting here in 2023, what strikes you as being different about India this time?
So, Anupam, in the past, we had to go and convince investors that India growth story is for real, and all the hurdles we are witnessing are a speed breaker. They are not speed wall which will force our growth story to get derailed. This time it is different. More and more people are convinced about India growth story. They don't need any external conviction. They believe in India's Amrit Kal, and this is a big game changer. एकदम सिंपल भाषा में कहे, पहले जब मार्केट गिरता था मैं लोगों को फोन करके कहता था डरिए मत, ये करेक्शन शॉर्ट टर्म है, हमारी लॉन्ग टर्म स्टोरी तो अच्छी है. अब बिल्कुल उल्टा है. मार्केट में कभी कभार करेक्शन आता है, लोग मुझे फोन करके बोलते हैं नीलेश भाई डरना मत, हम लोग पैसे भेज रहे हैं, आप लोग मार्केट से माल खरीदते रहना, मौका मत चूकना. I think this is the biggest change in India, where Indians have started believing in themselves in India growth story.
Now let's look at the world. Okay, I remember your 2018 article when MSCI had issued a warning to India. Okay, and I'll quote from that article because that article was so good, and I would request listeners also to just find this article and read it. Here's what you wrote. You wrote, India is the only country in the world where in the listed segment, the largest bank, the largest insurance company, the largest mortgage company, the largest FMCG company, the largest telecom company, the largest automobile company, etc., are majority owned by foreigners. Do you think this is possible in China? Should a country like India, which is so open and welcoming for foreign investors, be appreciated or threatened? It's such a valid point you made in that article, Nilesh bhai. What is it about India that the world, especially the West, gets wrong even today?
So many a times what happens is that India haven't bought Western media as China has done. China has given access to their market. They also, you know, engage into variety of activities which brings them influence. We haven't done that. We believe our actions will speak louder than our money or our words. Second, there are many non resident Indians who are probably more pessimistic about India. They have left India when India was not doing well, and they haven't learned about how India is transforming itself. They still carry the past baggage, and many a times they end up depicting India in a negative manner. I think the Western world should realize that while there are success models like China, Singapore, they are all autocratic countries. India is the only democratic country comparable to Western world in terms of values and ethics, which if successful will lay a road model for other emerging markets. It makes sense for West to ensure that India succeeds rather than fails. Otherwise, the world will move towards autocracy and not democracy.
Very interesting. Nish bhai, you've been in this industry for a long time, and I want to pick up from what you just said in the first, the answer to the first question, right? About how now investors tell you कि Nilesh bhai आराम से अभी market में अच्छा opportunity है, whatever. How has retail investing evolved before you? You know, if we were to look at the whole history, can you just lay down what has happened in the past, and then the next question will going forward? Because I want our listeners to understand, you know, when they see these numbers of 15,008 crore SIPs in value, it seems it is actually a very large number. I think 10 years ago, 20 years ago, this number was exactly zero. So if you could just take our listeners through this retail investing evolution in the Indian stock markets.
So there was a time in 1991, 92, Arshad Mehta time, 2000 TMT bubble time, 2008, market fancy, where retail investors were behaving as if they were momentum investor. They were chasing stocks without fundamentals. They were behaving in a herd mentality, and whatever was moving up, they were buying into it. By and large, their experience always resulted into disaster, and they were left with stocks which were of no fundamental value. Having eroded their capital, they always blamed stock market कि ये जुए का अड्डा है. They didn't blame themselves कि we ended up buying wrong stocks at wrong prices. Now retail investor is matured, especially after March 20. In March 20, for the first time, I saw retail investors sending money to mutual funds, even though COVID was on top of it and FPIs were sellers. I have seen since March 20 that whenever market is cheaper, it is SIP plus subscription by retail investors. And whenever markets are expensive, it is SIP minus subscription, minus redemption, which is bringing lesser money to the market. I think kudos to retail investors who have become matured. Kudos to mutual fund distributors who have popularized concept of SIP to every nook and corner of India. And more importantly, the maturity of retail investors gives me confidence that in Indian equity market, every correction is an opportunity to buy.
Yeah, that has proven to be true for so many years now. Let's look at the future now, Nilesh bhai. Okay, the mutual funds and the entire ecosystem. Okay, now whether you say, you know, the industry, regulator, AMFI, distributors, mutual funds themselves, they successfully work together to bring in $2 billion a month in SIP. Massive number. I think 15,800 crores was the latest one. What lies ahead? You know, what is the road ahead? What, in your view, is the potential?
So Anupam bhai, we have to provide financial security to every Indian. And as Indians, we have been great savers, but very, very poor investors or traders. 18 crore Indians have traded in cryptos and lost money. There are more than 11 crore Indians who play gaming and by and large lose money. There are more than 2 crore Indians who have lost money in Ponzi schemes purely based on Google search. The real number could be even higher. Why do people go and lose money in Ponzi schemes, cryptos, NFTs, and FNO trading. They all want to become rich overnight. But there is no shortcut to success. In mutual fund, some of our plans NAVs are 1000 rupee plus, some are 500 rupee plus, some are 100 rupee plus. We have delivered 5 times, 10 times, 50 times, 100 times return over last 25, 30 years. Collectively, there are 4 crore investors in mutual funds on a unique PAN basis. I have no option but to make this 4 crore to 40 crore. I have no option but to continue to work hard so that people who are losing money in cryptos, Ponzi's, NFTs, FNO trading become an investor and get financially secure. The government is not going to provide financial security to every Indian. That will become too expensive. They can provide protection to bottom of the pyramid. But beyond that, there is a large India which needs financial security, and mutual funds are the best way to provide financial security to every Indian.
Yeah. Nilesh bhai, how do we get this message across? When you said that mutual funds are the best security, how do we get this message across? Where, like, say when Kotak's sales team, Kotak Mutual Fund that is, sales team goes out and meets people who have never invested in mutual funds. What would you tell these people of the power of mutual fund, the power of SIP?
सो एक मैं जाके खुद अपनी बढ़ाई करूं तो कोई बिलीव नहीं करेगा. I have to create satisfied customers who will become publicity for me. They will do word of mouth publicity for me. And I must have patience that over a period of time, my satisfied customer base expands and create word of mouth publicity for me. Second, I have to give data to investors to give them confidence. We are in the business of managing trust and confidence. If I have your pocket share, it can disappear if I don't have your mind share. But if I have your mind share, sooner or later I will get your pocket share. As industry, I have to gain trust and confidence of my investors. How do I get that? Well, I have to be transparent. I have to deliver performance. And more importantly, I have to present data to back my claims. So when we go out in the market to new investors, we present data, we try to explain them ups and downs of the markets and the need for regular investment, disciplined investment. We have been running an asset allocation fund for last 19 years, which has
Wow.
delivered about 16% compounded return.
Ooh.
It has given negative return, it has given positive return, but over 19 years, it has delivered 16% compounded return. The volatility is half of market and returns are comparable to market. Now, these are the products which we push to the investors. Let them start, have experience, and as they gain comfort and confidence, they can keep on increasing their allocation. I'm also requesting all my existing satisfied investors to keep on talking about us in their extended circle. Combination of this two will help us expand our industry, reach from 4 crore to 40 crore Indians, and more importantly, provide them financial security. This is the mission of mutual fund industry, and we are thankful to SEBI, the regulator, which is blessing us.
Nilesh bhai, I'm sure you have also invested in mutual funds, right? Nilesh bhai?
Definitely, we have a SEBI mandatory regulation which puts 20% of our salary into all the schemes which we have launched, which we are managing. So we are practicing what we are preaching.
Nilesh bhai, now I'm an investor already, okay? I know that I know both of us know that behavioral habits have a major impact on return. Like you gave the example of how you've got a fund of funds which has given a 16% return over a long period of time. Some periods have been good, some periods have been bad. But you know that the return to me as an investor is probably not that high. What are a few tips that you can offer to our listeners? And I'm talking only of long term investors who want to create meaningful wealth, the financial security that you spoke about for themselves and their family. Just a few tips on how to handle their investments.
So the first step is income minus expenses equal to savings is not the right equation. It is always income minus savings equal to expenses. So please develop the habit of saving something. Second, savings are not equal to investment. Savings needs to be invested properly for financial security. And there are three tricks of the trade. One, regular investment. Keep on investing something on a regular basis. Little drops of water make an ocean. You will actually see that in real life, how 500 rupee and 1000 rupee SIP also over a period of time creates tremendous corpus. The second thing is disciplined investing. Please don't chase past performance. Please don't chase momentum. There is no free lunch. Markets will go up as well as down. There will be periods where your returns will be negative or low. There will be periods where returns will be positive. You should not get deterred by past performance or get attracted by past performance. Maintain a disciplined asset allocation between debt, equity, real estate, and commodity. Third, finally, is long term investment. You don't get mango unless until you planted a tree 12 years ago. Same way, money takes time to mature. It's like बिरबल की खिचड़ी पकने में time लगता है. So you follow regular investment, long-term investment, and disciplined investment. If you follow these three things, I'm sure at the end of the journey there is financial security.
Yeah. By every time na market goes up, market goes down, sharp movements, every channel runs to you. Ki bhai, what to do, what to do, what to do. So, and you know how the stock markets are, and more people are getting aware of it, more people are watching, more people are learning, which is a good thing. But when these swings happen, which kind of shake your confidence, especially for new investors, the good part is that a lot of these came in when the market fell 40% back in March 2020 when the COVID pandemic had hit us. How does one handle these, gut wrenching moves? It makes us do all kind of random things. But as someone, who's seen this market for 30, 40 years, how do you navigate these wild moves?
So one, despite spending time in the market, do I feel bad when my call goes wrong? Answer is yes. But I have to remind myself, should I compound my error because one my call has gone wrong? I must desist from compounding error. Second, what is risk? Risk is not knowing what you do. When I invest in market, I know markets will go up and down. So when market goes down, it is not a risk to me, it is an opportunity because now I will be able to buy things cheaper. I will be able to buy things better. I think this mindset or this awareness that markets will go up and down, I can't predict that, but I can react to market movement that is completely in my control. When markets are becoming expensive, my portfolio is in profit, I can do profit booking. When markets are falling, my portfolio will be in red, but I can go and buy out more things because it's cheap. That awareness will ensure that I can maintain my equilibrium. Ultimately, what do we have to do in market? We have to conquer our greed and fear. We have to maintain equilibrium between greed and fear.
Amazing. So, folks, I want you to go back and listen to the previous two answers. I think there's everything that you need to know. Whether whether you're a new investor or someone who's been investing for a long time. What Nilesh Bhai said in these last two answers is enough to give you a map on your behavior, on specific tips on how to handle your portfolio going forward. Okay, Nilesh Bhai, this for our young students. I know you are a CA, I am a CA. We know how difficult that journey is. And you would also remember, like, I'm an example of how during the Harshad Mehta era, I wanted to enter the stock markets. And now, of course, with the markets going on, there are a lot of young students out there in different fields who want to enter the stock markets as a career. Could be in sales, could be an analyst, could be in investment and banking, whatever. In your opinion, what are the educational skills required here? And more importantly, Anna, I want you to tell us what are the emotional skills that they should possess if they're looking at a long term career in the markets.
So, one, there's no need for any educational qualification to become successful investor in market. Investing is all about common sense, which unfortunately education cannot impart. So if you are a chartered accountant, MBA, engineer, great, there's nothing wrong about it. But if it is not, then that's not the limitation or hindrance. You can still do well in stock market using common sense. Number two, where does one make money in stock market? There's no one standard way. There are multiple ways. Some people can make money by trading. But please remember, 1 out of 10 will make money, 9 out of 10 will lose money. Some people will make money by investing. Now, in investing, you don't make quick money. You make money over a period of time. There is compounding. 9 out of 10 good investors will probably make money. So you have to take a call which is the route which is suitable to you, trading or investing. Third, again on investing, there are people who want to do their own research or people who want to, you know, give money to mutual fund managers and ride with them. So you choose what is convenient to you. If you are going to follow tips which are there aplenty on social media, that's not investing. If you are a trader, then you have to have stop loss. If you are an investor, you have to have averaging. If you are a trader, your horizon has to be short term. If you are an investor, your horizon has to be long term. So you have to pick up what are the tricks of the trade and follow that. Now, can a person be a trader as well as investor? Yes, it's possible. But please remember to not confuse between trading and investing. There's no one right answer about how to make money in stock market. There are multiple ways in which one can make money, but the most crucial thing is to follow what is suitable to you. Generally, we have seen a long term investor has more chances of success. A person who has done research and got conviction has more chances of success. And it is a lot of common sense which makes a good investor rather than just educational degree.
Lovely. Okay, Nilesh, bhai, big picture, just last couple of questions on this episode now. What is your view on India? I know that you're bullish. And as a result, the stock market's going forward. Your long-term view of India, where we are on the economic growth trajectory, and as a result of that, where do you see stock markets going?
So if we see state of Maharashtra today, it has same GDP as whole of India 17 years back. The state of Uttar Pradesh and Uttarakhand were combined in 2001. Today their GDP is same as 2001 India. Tamil Nadu, Gujarat, Karnataka are at the same level where in 2000 India was. In about 20 years, the six states have created what was yesterday's India. Over next 20 years, can they create as big state which is equivalent to today's India? 20 साल पहले कर दिया था तो अब भी करेंगे, कोई नई बात तो है नहीं. Effectively in front of us, we will see 5 times today's India in these six states. And then there are 23 other states and union territories. They will also do something. Collectively, will we see multiple times today's India getting created? From 3 trillion to 5 trillion to 10 trillion to 15 trillion to 20 trillion to higher, we will see India's journey, India's march. Now, choice is up to us. How do we participate in it? As a citizen, we have no choice but to work hard like last 20 years. Without our hard work, India is not going to get replicated.
Oh,
Second, as an investor, it is my responsibility to ensure that I leave benefits for my next generation. Today, if I go to my father and say that, look, dad, you didn't invest in stock market and hence I have to work, my father can probably respond saying that, look, in those days there were no television channel, no newspaper who would have taught us about financial investment and India growth story and stock market and mutual funds. I'll probably forgive my father saying that, okay, dad, no problem, I'll continue to work hard. 20 years down the line, if your kids come back and say that, dad, you didn't invest in stock market and we have to work hard now, what will be your excuse?
Wow.
You won't be able to provide any excuse like our parents could give. So it's for our next generation, we have to participate in India growth story. India is a rising tide. All boats will get lifted.
Very interesting. Anyway, last question, standard question. I know that you like reading, and I know that you're also a spiritual person. Any book or anything that you could recommend to our listeners in terms of what they should read or what they should know generally?
सो अनुपम भाई, सामने समंदर पड़ा है एंड उसमें से हम कितना पानी ले सकते हैं? Well, it is up to us. You have to read. Reading extends our horizon. Reading gives us what I call common sense. And I have found that even if you read sports magazine, or if you read spiritual book, or if you read hardcore economic and finance book, they all continue to expand your horizon and it makes you better investor. I think every person should invest probably between 1 to 3 hours for reading.
Wow.
That makes you better, that extends your horizon. And at the end of the day, investment is all about seeing things which others are not able to see.
Amazing. And I'm sure that by 1 to 3 hours of reading, you didn't mean social media, right? I mean, like actual books, just to clear that for our listeners.
Yes, reading real stuff, not the WhatsApp university fabrications.
Well, amazing advice, folks. I hope you got, the real. You need to really get the gist of what Nilesh Bhai said because it's so simple. Sometimes it can miss you. What he's saying is that there is a vast universe of things, books that you can choose to read, but at least read. 1 to 3 hours, whatever book that is there. But great advice, Nilesh Bhai. Folks, that is a wrap on this episode of Paisa Vaisa. I really wish I had more time. Maybe I can get Nilesh Bhai to the studio later on, but that yeah, that's a wrap on this episode of Paisa Vaisa. My guest Nilesh Shah, managing director of Kotak Mutual Fund. Nilesh bhai, an honor to have you with us. Thank you so much for doing this for our
Thank
listeners.
you.
And listeners, you can check out other interesting podcasts on the IVM network. You can listen to us on the IVM podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I am your host, Anupam Gupta, B50 on Twitter. And thank you, folks. Really, thank you so much for listening to Paisa Vaisa.
IVM.